Hey, it's Tyrone Jackson, the wealthy investor, always trying to give you the advantage so you can make more money in the stock market. There's one stock that has a Dow component right now that I really want to talk to you about, and that is the Walt Disney Company. Now, we all know that Disney's a member of the Dow Jones Industrial Average, those top 30 stocks. Therefore, it carries less risk than, let's say, a growth stock. If we take a look here on Yahoo Finance at the 5-year chart, you know how much I really like stocks that are in strong uptrends over a 5-year period. See, Disney started back in 2013 on a very nice upward trend here. Starting all the way from $70 a share. It made it all the way up to 120, and then it broke. It gave and then it broke. Why did it do that? Well, Disney is a company of divisions, right? So it's in the theme park business, resorts, movies, broadcast business, and obviously we know that it's in the middle of purchasing 20th Century Fox. It is a powerhouse. But right from this point down here, the division that gave them the most problems, as you recall, was ESPN. They couldn't monetize the sports division. They cut it back and they tried a lot of things, and that's what held back the stock, right? Been a shareholder for a long time, and now there's a change because Disney has done something really important. You see, in the third quarter of 2018, on November 7th, Bob Iger, pictured here, delivered $14.3 billion on the top line, and sales were up over all divisions, including ESPN. You might recall on the broadcast side, Disney owns the ABC television network, hit shows like American Idol, Blackish, and now The Conners, which looks like it will still be a rating success. In addition to these properties, Disney, as I mentioned, is about to purchase 20th Century Fox and their library. So this company is a powerhouse. So when there's a shift like that, I like to let you know. So this 5-year chart, which should start trending upward, because here's what I want to show you. It's the 1-month chart that shows when a stock is back in favor. So do you see how the stock is bounced here? It was up here. It bounced off a low, and all of a sudden it's starting to trend upward in the last quarter of the year. That's really important. Why is that? And I want you to remember that it's me who told you this, because you should only buy the stock if you understand the story. It's all because Disney's about to launch their online service in the next 52 weeks, and that makes them a major competitor of who? Of Netflix. Okay, so you have to understand when one company is seen as a rival to another. Now, isn't it interesting that over the last month, Netflix has dropped from $364 a share down to where it is now, which is what? $286 a share, right? And look at this trend. And Disney bounced off of 111, has started to rise. Why? The perception on Wall Street is that Disney is going to take market share from Netflix. Now, I personally do not believe that's going to happen because Netflix already has 100 million subscribers. When Disney launches, they'd be lucky if they can start with 10 million subscribers, right? But really matters is the trend here. So the question is, with $14.3 billion in revenue in the third quarter and the stock upward trending, do I think it's time to buy it? The answer is yes, yes, and yes. However, in this environment where we have all this volatility going, I think Disney makes a better covered call right and a great way to pull in money while it is upward trending. Okay, so that's the word on the street, but I want you to be aware that even in the same market, Disney is upward trending and Netflix is doing what? Falling, because the perception is that Disney is going to steal market share since they pulled all their content from Netflix and put it on essentially their own streaming service. All right? Don't buy the stock unless you understand the story. Remember, it's that financial education that's going to help you make great choices in the stock market. Hey, listen, I hope this video has helped you to understand a little bit more as to why this Dow component is upward trending. As always, you can download my free ebook about covered call writing and the market and how to use stocks like Disney for income right here at thewealthyinvestor.net. Until now, stay open. Until next time. I'm already excited to see you again. Stay open, stay positive, and get that financial education you need to get ahead in the stock market.